Futures are in the green ahead of the August jobs report. 728,000 jobs to be added in August. That's the expectation when that report comes out at 8:30 a.m. Eastern Time. Looking for slowing job gains amid Delta variant concerns. Joining me now, Capital Wealth Planning Advisory Board member and SALT Strategy founder Jeff Salt. And joining the conversation all morning long, IWF Senior Policy Analyst Patrice Lee Onwuka and Wall Street Journal Assistant Editorial Page Editor James Freeman. Great to see all of you this morning. Jeff, what are you watching for in this jobs report?
I think it's going to be right on the money. I think they've got it pretty close to 725,000 is the number I've been hearing. So I don't think there's going to be any surprise out of the job report, and I think the stock market's going to like that.
The S&P has been seeing consistent gains since November. The Wall Street Journal comparing it to three wise monkeys: see no evil, hear no evil, speak no evil, highlighting how we've seen record after record despite headwinds like the Delta variant, rising yields at some points, and the crackdown from China. Jeff, what do you make of that?
Now, I had a portfolio manager last week call this rally the rally from hell, and I said, what do you mean? He said, well, it's been straight up, just like you said, since November, and it's given nobody any kind of decent pullback to buy into, so you either had to pay up or sit on your hands. And a lot of not just retail investors, but professional money managers have been sitting on their hands while the market's been running away. We're in a buying stampede. This is the longest buying stampede I have seen in 60 years of looking at markets, and I just hope I'll be able to recognize when it ends and we finally do get some kind of pullback to buy into.
James Freeman, jump in here. Based on all the work that you do, what could end it?
Well, one thing, Jeff, I'm curious about is how you view inflation. We have an op-ed in our paper today from Senator Joe Manchin of West Virginia saying, let's pause before Congress spends another $3.5 trillion. He's worried about inflation. He's worried about federal debt. I look at the NFIB jobs survey, small businesses, they have a hard time finding workers. They're raising compensation, which would suggest maybe the inflation is not transitory if they have to raise prices too.
Yeah, I don't think inflation is transitory. I think inflation is picking up at the margin, but I don't think it's going to, be high enough to really impact the equity markets or the economy.
By the way, James, thanks for stepping on like all the questions I have for the next hour. I printed your column out about the NFIB, and then I've got Manchin right here. You didn't mention Gene Scalia, his column from the Journal today. I'm joking,
well,
but
that we think alike.
No, Jeff, but what are you underweight here?
I would underweight utilities.
Anything else?
I don't think so. I think, in a secular bull market, which is what we're in, all ships tend to rise. The reason I would underweight utilities is I think interest rates at the margin are going up.
At $75 billion in startup value was wiped out of the markets following a 25% drop in SPACs since February. This as Reddit prepares for a potential $15 billion IPO, and Allbirds filed to go public on the NASDAQ, even though the sustainable shoemaker has seen nothing but losses. What do you make of this drop in the SPACs, Jeff?
I don't read a whole lot into that, Dagan. It's something that we look at, but we don't put a whole lot of weight into that. I put a whole lot of weight into the action of the Dow Jones Industrial Average, the S&P, and the Dow Jones Transportation Average.
Good to see you this morning. Well said. Jeff Salt, thank you so much for being here.